Hello traders, this is Zane here from Traderbook. I'm going to do a quick top-down analysis on a couple of the markets that I've been trading actively over the last few weeks, and just a recap of previous analysis as well. If you do find that this analysis is helpful and adds value to perhaps looking for your own trading opportunities or setups, please visit traderbook.co.uk, where there are mentorship programs available for myself and other traders, depending on your style and what you want to learn. But without further ado, I'm going to get into this. And this video is for educational purposes solely. As I always say, you should use your own personal discretion when searching for trading opportunities and really trying to develop your own trading style and strategy. So without further ado, let's get into the NASDAQ. Now, if you guys have been watching my previous videos, you know I've been a strong buyer of this index and will remain to be a strong buyer of this index, into the future. Already gone over a couple of fundamental reasons why. As of this week, it's the 26th of January, coming up to midday GMT. A lot of strong earnings reports coming out from some of the big tech companies, and also a lot of kind of market, I think, regulation, so to speak, or correction in more accurate terms. There was a rotation into certain stocks and certain indices that were really quite strongly affected from the pandemic because of the prospect of stimulus being reached in America and the Eurozone. Now that rotation has kind of been very short-lived, to say the least. And what's happened is you can see a lot more money has moved back into the NASDAQ, into the companies that have systemically been very strong throughout this last year of coronavirus chaos, so to speak. So if we look at the monthly time frame, we can really see that the market is overextended. I mean, we're trading at the highest level it's been at, period, full stop. It's never been higher than this, right? I've actually been buying this market consistently month by month for the last 3 months. And, again, depending on where you're entering, most of the time you're going to be winning those trades, but there have been occasions where I've entered too early and I've had to cut my loss very short. But that, again, is what it's all about. It's about entering, keeping your risk tight, and looking for re-entry when you're wrong. Now, on the monthly, we can see it's quite overextended. This is purely just price action. On the weekly, if we come down to it, what we can see is that the momentum, the buying momentum is starting to fizzle a bit. It's still very strong trend upwards, and the market is very much trying to find a fair area of value or balance to a degree, but still very much overextended. So personally, I wouldn't look to buy where it is right now, around 13,400. But when there's a dip, again, according to my trading rules and my trading strategy, I would be looking to re-enter on the long. Personally, I wouldn't be taking any shorts, even though some of the shorts can be very lucrative. If we come down to the daily, you can see that yesterday, new high was made, and the market is very much just trading within the range of that body at the moment, the previous day's session, as we can see here. And it's a situation where, again, there's no current trading opportunity. I will let you know I'm still in a long from the beginning of last week. Again, I'm scaling into my positions and scaling out of them accordingly. So two of my targets have been hit. My third and fourth target have yet to be hit. So I'm just going to keep those positions open. They're on break even now. And then if we come back down to the 4-hour chart, we can really see what there was, from this candle alone. So this candle on the 25th of Jan, about 3 o'clock GMT, very much a stop hunt, very much a hunt for any orders below this key area of previous support, just so that the market could move back up, collect some of those orders, and come back into this range above where that previous support is. Now, if you are currently long, stay long. If you are not in a trade yet in this market, I would advise against going long from this point, but definitely look for further correction and re-enter on that long, because reality is these companies are going to report stronger earnings over the year to come. They've already done the best out of all equity sectors over the last year. And that purely is because their business models are based around digital subscription services, sales of technological products, and these metrics are constantly growing. So again, very much still long in this market, very much looking for further entries to the upside in this stock index more than any other, the second being the S&P 500. Current advice is, if you're not long, wait to enter into the market. If you are long, hold your positions, especially if they're already at break even. All right, so the second market we're going to take a quick look at, just on the monthly, weekly, daily, and the 4-hour charts. As I'm sure you guys are aware, I'm using the top time frames for direction, for real bias in the market, to figure out where those key areas of balance or potential breakout points are going to be. And then I'm using the 4 hours all the way down to the 5 minutes to really find those sniper entries. Now, the thing with trading is you're not going to be precise or 100% accurate all the time. So what you really need to learn to do is scale in and out of those positions accordingly, set multiple targets, keep your risk tight, and be prepared to be wrong before you're majorly right. As simple as that. So we're looking at the market for Brent crude right now. I'm not going to look at the market for US oil, but a lot of the things I want to discuss here are going to be parallel in the US oil market. Just obviously key levels are going to be different. Key areas of value are going to be slightly different, but the charts and the actual assets themselves move in tandem with each other. So if we look at the monthly, we can actually see that we are very much trading at this area of resistance, of previous resistance, going all the way back to 2017, Jan, Feb, and March. We are currently there. Now, personally, the bias in this market for me is going to be to the upside. As far as fundamentally, and as far as lockdown restrictions go, I can't see there being much more momentum to push this market further up. And I personally do think it's due a correction. You know, you don't have to take my word for gospel, but that's what I'd be looking for. I'd be looking for a re-entry on the long after some sort of correction. Potentially, if my strategy rules are lined up, and if I see it going the way I expect it to go, I might be taking the short in the medium term, in the short term, but very much still bullish on this market for the year. That being said, if we come back down to the weekly, we can see what's already started to happen. The buying or the bullish strength has kind of started to fizzle out a bit somewhat, and we are trading very much at this key area of resistance, not breaking too far below, still staying very much here, consolidating and potentially waiting for a bit more momentum, potentially a bit of order filling down to here, maybe even further, before there is a move to the upside, a further leg or push to the upside. We come back down to the daily chart. What we can see is we can see that the strength of this trend, or the strength of movement, has been pretty consistent since November 2020, or really since the beginning of November 2020. In fact, it hasn't even come anywhere near those lows. It found some support and potential resistance around the $50, $51 mark, broke through that, and has now found support about the 54.5s mark. But again, still very much, you can see that this price action is consolidating, it's collecting orders. Essentially, the market is deciding what it wants to do based on the fundamentals, based on the current price of oil and the relative value in the market. Now, if we come down to the 4-hour chart and just have a quick look at that, what we can actually see is that there's very choppy price action. You know, this is an area of balance that the market is currently in. It's found its area of fair value for the time being before making that leg further to the upside, or potentially what I'm looking for is a correction somewhat to the downside below, or at least a test of this area near the 54.5 mark, potentially even down to the 53.5 mark. And again, what we just want to see is how the volume is going to build around these areas, whether there's going to be a lot of momentum coming into one side or not. You know, but if we say long-term trend, long-term, I am still bullish on this, especially as recoveries not only, you know, start to kick in, but actually start to be realized across the economy, which is, again, we're looking at a further 6-month lag before I would say that would happen. In the short to medium term, I would expect some sort of consolidation, maybe some sort of bearish correction before a further move to the upside. So very much waiting. I'm not looking to actually enter any trades on this market right now. Currently in trades on the NASDAQ, currently in trades on the sterling, on sterling pairs. So let's see what the week has to bring.